over and saying hey to Chris. So coming in right after this.
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
All right, and we're back with Chris. Hey Chris, how's it going, man?
It's great, Nick. Happy Friday, man.
Happy Friday. You had a crazy week, Chris, and I think it's your victory lap moment. I'm ready to hear about your trades that went crazy this week. Give us the rundown, basically, on your complicated to me, but you are way more advanced with options. But what was your game plan that you did this week, and how did it work so well?
Yeah, it was a bit of a shotgun approach on all the indexes. The good thing was when we talked on Monday, we expected volatility, right? So the average move in the SPX for the weekly is about 104 points, and it moved about 130 points. The average move on the SPY is about 100 or like $10.44. It moved $13. The Qs ended up moving $16. The DIA moved over $10. Like all these expected moves were beyond. And that to me is easy profits because I play it directionally neutral. I didn't know if the Fed was trying to talk things down this week. It didn't. Like Wednesday's move was up on the rate decision, up on the press conference. And the only thing that we had Thursday morning was a gap higher in the Qs, and that allowed me to close out. So I was closing out. We did the trading battle on Wednesday. My SPY closed out for profit. My DIA for profit, XSP, SPX for profit. And then Thursday morning, because of that gap higher in the Qs, close out the Qs. So all those trades closed out profitable this week. We also had an earnings print. I posted this to Frank actually offline, and I didn't take the trades because I had some really good profits this week, so I didn't want to mess with anything. But I looked at earnings and I priced them out how I usually trade earnings strategies. It was on FedEx and Lululemon and Nike. All three of them today, like instant profits at the open. So could have been a gangbuster week. And it was pretty awesome. I'm not going to lie. Like it was a great week overall. And, I continue to grind. Now, let me ask you this. Should we just stop shorting the market? It's like, I'm playing both sides of it, but it's like, I saw something yesterday where I think I posted this on my Twitter. We don't see this a lot, but I thought this was an interesting display. This is a 20-period Bollinger Bands, and we don't often see a full candle print outside the Bollinger Band all by itself. And when it does, there's usually a correction that ensues. But I'm kind of exhausted, like trying to call the top, and maybe that's a good sign because like if I'm getting exhausted, I've got lots of patience and experience in these markets that maybe it's just worth like taking more stabs at it, playing this type of stuff. I priced one this morning. You see me talk about this in the sessions. Let me get this up here, right here. So if I look at pricing on another strategy like this going into next week, the expiration is a little bit odd. So I don't know if I'm going to take this trade today or end of day, but we have the quarterly expirations next Thursday. We have Good Friday. So the markets will be closed on Friday. So I'm looking at a trade that runs me into Wednesday and Thursday. And I'm gonna treat this like kind of it's a calendar spread, but it's on both sides, and it's a Wednesday Thursday expiration instead of a Friday Monday. Doesn't really matter, but the point is if I can position for this and we get like a 50 to 60 point move one way or the other next week, as we go into quarterly expirations, this is another way that I can take a trade. It's going to cost me about $10, but I could probably walk away with $1 or $2 of credit pretty safely. So I'm probably going to save this trade for later in the afternoon to see if I can get the cost down a little bit and make sure I can go into the weekend like position very much centered on where the SPX is trading. And then going into next week, I'll mess around with these legs a little bit because I'd like to bring this with this strategy. I'd like to have these peaks a little bit higher, and I'd like to have this dip a little bit flatter. So there's ways that I'm kind of looking at the profile to make sure that it favors me. And it was crazy this week. I think I took a screenshot. Let me go back to this chart here. So this is how the trade initially looked when I took this. This was last week Friday, and it was this week's trading. And I don't know if you can see my screen here, but
Yep.
The numbers are really small, so I'll just read them to you. The number was, so the ask price here is $13.40. That's where I got filled at, $13.40. Now, as we unfolded the trading battle on Wednesday, this is 8 trades, by the way. Like it's 4 put trades, it's 4 call trades. It's a big spread, and I've got it on 10 different accounts. So that's why Wednesday was so crazy, because I'm like closing out. I've got all these different things running. This is what it looked like
all at the same time.
Yeah. This is what it looked like on Thursday. So this is Wednesday, like near end of day, Thursday morning. It completely changes the profile of the trade. But if you can see this arrow, that's actually showing real price. So it went from a $13.40 debit to trading at $20 and change. And yesterday it was trading up to like $22 and change. So
that's awesome.
I got out safely around like $2. Like this was during the FOMC, and it was up and it was fine. And I'm like, I'm not going to give this profit back. I'm up on all those index trades. But had I sat on it through Thursday, it would have been a 66, almost 70% profit. So, hindsight 2020, but still a good trade.
Yeah. And Chris, you asked the question, is it time to stop short in the market? I will say this,
right? I'm exhausted.
While I've been on the sidelines, I know from past experience that short in the market is just the hardest trade in the book, in my view.
Yeah.
Even when it's in a downtrend, it's so volatile. The rallies are so, they can pop up and grab your stop wherever it is. I find that to be one of the most difficult trades in the book. Now, I'm not saying I don't short anything. I can short other things and feel a little bit more comfortable with it. But indices, for me, the worst case scenario is usually, the worst case scenario is I'm long and it's trending lower. That's no fun. But the second worst case is it's trending up and I'm missing it. So that's been kind of where I've been at recently. However, you ask, do you just completely stay out, or do you ride what's in front of us? I think I'm going to do what I keep doing.
Yeah. I'll keep taking stabs like him. I'll be both sides. I'll take look, man, I'll take those 10, 20% gains all day, every day. And when you said it's hard to short, this is where I started to gravitate towards like those, 1 to 2 week windows where it's very hard to short in a day. I seldom, zero DTE is super popular now for 0 days to expiration. I seldom in a given month take any 0 DTE trades. If I find something I really like, maybe take a stab at it. Like yesterday I did one, I made, $50 on a $1.90 debit. So it was a decent return. It was fine. But I've got to see like a fantastic setup for me to be like, I'm going to trade for today. Most of it's like, give me a week, give me a week or two, and I think we can be right.
Yeah. I just feel like there's other trades, Chris. Like for me, if I do have, I'm not bearish, but I have like, okay, I can't touch it right now. I got to wait for a pullback. But you mentioned, there's a couple ways to play it. First of all, I do think that you can still, I'm not saying like absolutely I won't touch it, but like, for example, I was marking up a Dow trade here. Like, yes, the market has gone ripped higher, but I'm a trader. I'm not investing and locking in my life savings here and now. I'm saying, maybe here I take a stab at it. Stop's got to go for me under this structure, but there's still a trade there that might just keep running. And again, for me, I mentioned I have to kind of bow down to my own strat. We talked about this last time. I have to kind of bow down to my systematic approach, which is of course the edge finder. So if the edge finder's starting to point bullish, which it is at indices, will that change at some point? Yes, but I have no idea when that will change. And so I'm with you. I think you trade momentum when it's in front of you. But also another side factor there, Chris, too, is I've mentioned many times to you, I've been trading things like oil and gold, and I've actually been doing pretty well, kind of keeping myself busy over there while I do want to get Part of the reason, Chris, that I'm frustrated by the pullback is because outside of just my momentum trading strategies, I also want to build some wheel strategy positions, which I've told you about as well. That's
Mhm.
more frustration is like I want to sell puts and get filled and sell covered calls and positions. And I've been kind of sidelined on that portion of my portfolio. Momentum, I've been doing great because there's
Right.
everything moving very nicely. I've
Right.
just been missing out on that wheel strategy side. So but that's how it goes, Chris. I mean, when you have strategies that are of different natures, wheel strategy is more of a range bound market lover's spot. It's not great in momentum. So right now, my momentum strategy is doing okay for me. I'm up. I think on my main account like 20 grand in the last month. So I shouldn't complain at all. But
Mhm.
20 grand up is a lot better than 30 grand down, which is what happened in 2022 several times over. So
Right.
uh, can't complain. Just got to stay patient for some of my other strategies.
Yeah. What kind of any particular instruments you're looking at for the wheel strategies? I'm just
Yes,
wondering
I'll
if I
show
can
you.
throw a couple at you.
Here's what I
What do you
got. So
liking? Yeah.
I have a big list of things that I could potentially get into. One of my favorites, this is I am aggressive with this. This is more of an aggressive area is at CIBR. It's a you might know it already. It's a
Yep.
cybersecurity ETF, super high risk, super high reward area of the market. I probably won't touch that one unless I get a pretty strong read. So I'll just show you this. I like to use the weekly. We have a really simple Bollinger Band kind of standard deviation indicator that we've built at A1. So if this thing gets overextended, that's a trade I've been waiting for a very long time on. But I'll
Mhm.
start selling puts, and maybe I'd actually love to get filled in that scenario. Start, kind of holding on to that one. But then there's other like solid ones, XLY, right? Just consumer discretionary. I could go with SPY. I could do DIA. I've done a lot of wheel strategy on DIA over time because again, these are things that I wouldn't mind owning forever and having them in a portfolio. I even have some international stuff like INDA is India. I
Mhm.
am currently my only wheel strategy setup is on FXI. So if I show you FXI, let's see what I've got here on FXI. So I've got currently a position at 21.91 and I've sold calls. So right now, this obviously like I wouldn't mind getting called away from my shares, but because the market has dipped off those, I've got both of those trades in profit, like the covered call and the position is in profit. So it's boring stuff, but
Yeah.
it's what I like to do when it comes to options. Keep it really, really simple. And maybe someday I'll get over to your side of things where you've got all these like awesome ways to break up the market. And while I can sit down and understand those if I take it piece by piece, for me right now, I'm still relatively beginner to the options market. I've been only doing it for about a year now. Of course, I
Mhm.
understand like all the other mechanisms and things that we talk about on the show, but the actual
Yeah.
functionality of options, I keep it really simple for now.
As you should. I mean, honestly, it's like if it works for you and it's simple to follow. I mean, one thing that I find myself doing is I tend to get, I mean, look, it's short term, it's medium term, it's long term, and it's like it becomes challenging to balance all that in a given week. Like when
Mm,
I go through every day and like spot check my portfolio A to Z, there's a lot going on. If
yeah.
I'm going through just positions in general and I talk through all of this stuff, it's like there's a lot that I'm looking at. There's all these accounts linked to it. And one thing I had happen this week is, and this isn't a bad thing, is MO. So this is Altria, formerly known as Philip Morris. This
Mhm.
is one of the best dividend stocks in the market right now. They just declared a 98-cent dividend, so we had a big dip. Now the good thing was
Is that less
is
than
I
expected, Chris? What caused
no,
that
it's
dip?
not. It was not. Well, it's a dollar off. I mean, it was 45
Oh, just
bucks.
the okay, got it. Yeah, yeah.
So it was the dividend declaration for a dollar. So you're going to get a share price drop in a buck. So it happened. But what was nice is
Right.
as this is getting up into this high, so I bought the shares pretty much right when the year started for a lot of my clients. I bought the shares
Mhm.
between $39 and $40, and I had it covered at like 42.50 and $43. So I could have done nothing, and I could have had the stock called away this week, and I could have generated 2 or 3 bucks in profit. I could have still collected
Mhm.
dividend for another $1,000. But what I decided to do instead, because look at this chart. I mean, it is telling me something where it's going to be an interest. I mean, we know this. Like every year is interesting. There's always these story. It's like this is like the most kind of storied stock market that I've seen in a long time. Right? They're chasing Nvidia.
Mhm.
They're chasing, Apple's down and Google's down. Google and Apple are trying to merge and do something together for the first time ever. Longtime
Mhm.
adversaries. Now they're frenemies, but they're going to do something together because they don't innovate. I mean, you're getting momentum stocks like anything in semiconductor space is absolutely crushing it. Anything AI is crushing it. But then you have the boring stuff like this, right? Where
Yeah.
this is
Yep.
like a 9+% dividend that's reliable and it's a low beta stock that trades at like
Yep.
0.5 beta. So I
It
mean,
reminds
it's
me
not
of Rob. Rob is doing Oxy, OXY. He's been doing. I've listened to him over
interesting.
and over talk about doing, wheel strategy on OXY, which is a Warren Buffett pick as well,
Yeah.
and
Yeah, yeah.
really interesting. I obviously I can't. I haven't been speaking with him. He's too hard to reach, but the OXY has probably been treating him pretty well. So I've been listening to his podcast he's been doing. So I've been listening to it.
Nice. I just saw him pop up on an Instagram video yesterday. I was like, "What's up, dude? It's been a while since I've seen him out in the open." So he's come out of his stump like
Yeah,
Punxsutawney Phil.
he's back.
Yeah, he's back. So anyway,
Yeah.
yeah. Well,
Well, Chris,
I'll get
I'm
I'll
gonna
figure out
leave
how to
you.
get connected.
I'm gonna give you the Yeah, I'll give you
Yeah, go
access
ahead.
to the stream here to let you take over. Before I
Okay.
do that, let me just say to everybody who's listening, tuned into the show, Chris has his own YouTube channel. Do us a favor. Again, I mentioned this earlier with Kenzo, but same thing goes for Chris. If you would like to support us in any way, the best way you could possibly do that is just by following the people that we bring on who contribute their time and efforts to share free knowledge to people who are looking to get better at trading, investing, whatever. So, if you haven't already, make sure to go subscribe to Chris Pulver, find his Discord, all that good stuff, and stick around because I'm sure you're going to learn a lot with him. Chris, thank you very much for taking over the show. We'll see you back next time. Have a good weekend, too.
Thanks, Nick. You too, man. Take care.
See you.
All right. All right. I'll jump into gold. I see that pops up almost every day that I joined A1 Trading is everyone wants to see gold. Gold is good. I think gold looks great for the year. It's been one of my better bullish trades. We've obviously had, gold kind of break out a multi-year range. We had highs in 2020. We had lows in 2021. Those are tested several times. There's a saying in the markets, there's no such thing as a triple top. And therefore, when we had, this resistance and this resistance and this resistance, right? Then we had this resistance. Well, we're finally starting to see that break manifest. So I am bullish on gold. I have some positions in where I'm doing some credit spreads on gold. I'm doing some credit spreads on gold futures. I'm doing some option trades on GLD, and I've got two measured moves on here. This is my halfway take profit around 2270, and this is my full profit at 2470. If I'm going out in time, if you're an investor, there's no real time horizon, right? You're long term, you're committed, you're going to see this kind of, through and through until it hits your profit targets. But I like to have time as a factor because I trade options. And so I went out to January of 2025. I think that is enough time for me to say if this move really has legs, even through the rest of this pre-summer push, even into summer trading, even as the Fed starts cutting rates possibly in June, as it's forecasted to show in the Fed Watch tool. Now that we had the FOMC this week, if the Fed starts cutting rates once, twice, three times as what's planned on, gold is still an inflation play. We've seen stickier inflation that's probably going to tick up or be consistent or maybe tick higher. I don't think we're anywhere near 2% for the U.S. inflation. I don't think it's. I think it's going to be a challenge to get below 3%. To be honest. That being said, gold has been benefiting from a lot of flows. I think it's not just retail traders. In fact, it's probably hardly retail traders because nobody's talking about it. But I think gold is a lot of central banks. I think gold is a lot of other countries that are trying to pivot away from dollar dominance. Now, I don't want to have that discussion on is it dollar versus BRICS and is the dollar going to be dethroned as US world reserve currency? Probably not. But I think a commodity backed or another alternative backed currency base like gold, you're going to see a lot of countries probably gravitate towards it. It certainly is pretty appealing. I listen to a podcast that I really like and I follow. It's called the Market Huddle. A couple of smart fellows out of Canada. They interview a bunch of great guests, and they had a guy on that. It's rare that they have like an actual company on, but his company was Silvercrest Metals, and they just talk about these companies that have all these mining projects, junior miners and senior miners, and of their projects, this was staggering to me. One project out of 750 mining projects actually get online and become profitable. So it is a ridiculously low probability business. Yes, it pays really well if and when you get profits. But the nice thing is their underlying asset, gold, and the physical metals and the precious metals that are they're not finite, right? I mean, obviously there might be almost only so much gold to go around, but they're extremely difficult and expensive to actually get. So there is scarcity from that standpoint. Now, to have it be so high margin, high overhead, that's the rough part. But the good part is their underlying asset is booming right now, and I think that those are companies that instead of going to dollar reserves or bond reserves, they just hold, 5 to 10% of their balance sheet in gold. And so this is a very similar conversation to what, if anybody follows Bitcoin and you follow Michael Saylor and MicroStrategy, what he's been doing with his balance sheet is just buying Bitcoin. He's got a personal stash like crazy. It's in the MicroStrategy balance sheet. MicroStrategy is at all-time highs. It looks like Bitcoin now. But that type of speculative run is insane. It's like you have part of your, and it's not the whole thing, right? It's like, yes, you still have your normal functioning reserves and you've got cash to do what it needs to do in the fiat system. But to have balance sheet in gold, have balance sheet in silver, have balance sheet in Bitcoin, it at least it's an alternative. And because we're seeing those assets running well this year, even if it's pure speculation, it appreciates. So I think gold from a measured move, and I obviously like kind of just talk fundamental there for a second, but in a measured move and pure technicals, this is what I'm liking. We've had a multi-year range break to the upside. I think that gold is going to be volatile, but I also think that gold is going to continue to push and it's going to continue to grind and it's going to get higher. So I think gold at least gets to 2274, 2275. That's my halfway point. And all I did for the halfway point is this: you take this measure move right here and you take half of it. That's a high probability move. You take the whole measured move, now you're up here. So if I get all the way to 2470 in the next, 10 months, I would be thrilled. But if I don't, can I at least hit this point for some profit? Sure. I've got on GLD, I've got gold futures running with some bull put spreads on GLD. I've got some long calls that we're trading at 201. I've got a long call at 190. So right now, I mean, I've got 20 bucks in there, and I mean, I paid like 14 for it. So I'm already up $6 or $7 on GLD, and I'd like to see if this can go higher. If I want to measure this one, I'm surprised I don't have it on my chart, but I'll figure it out right now. Let me measure this move right here. So let's take that high to low, and I'll clone that. So that's going to be my projected move for gold. That's the full measured move. So right there, that's my full measured move. And then let me take 50% of that. Oops, I need to use a fib here. Take 50% of that. And then that will be my safe play right there. So a couple levels on GLD based on that measured move. GLD with a breakout, I can put it right here at these highs. So we have a breakout above this 195 high. My halfway point's around 213 or so, 212 to 213, and the full move's up to 231. So any dips, any pullbacks, I'm looking for a bull flag. If we get it, great. Here's the daily time frame, which right now we could be doing something like that. We could have a little, broadening pattern right here that's pushing off this posture. So there could be a little indecision, little volatility, but ultimately, the market momentum wins out and gold continues to head higher. Okay. So that's what I'm looking at. If we get pullbacks to this previous resistance, I'm looking to see if that's a chance to buy the dip as well. So that's gold. Don't forget the little engine that could, possibly the stepchild of the gold run, which would be silver. I still think silver looks really good as well. It's also one of my favorite trades on the radar that I talked about early in the year, and I know I have analysis on this chart. Like, what the heck, man? Unless my chart's not loading. Weird. Anyway, is this the right workspace? Yeah, the right workspace. Yeah. Okay. Um. Anyway, if we break above 26, I could have swore I had this yellow box on here. Anyway, another easy way to measure the move is this: take the box from this swing right there and project that move to symmetry from this pullback. So symmetry swing to me on silver gets up towards 35.67. If you want to do a one wave, this is a 3-wave projection, and then a 5-wave projection. You would just take this again from around this high and project it all the way up here towards around $47. So I've got that for a level. I've got that for a level. Those are the areas that I'm going to mark my silver. Okay. Now, additionally, and I've got this in my Discord channel as well. If anybody would like to join my Discord, I can post the link to that. But in my Discord, I posted this under my analysis thread. I'll show you the charts right here. So this is Bitcoin. This is silver. Let me click on this. This is another way. The reason I really like silver. We have this swing from low to high, and that $26 level is so critical. I mean, if we can break $26, I look at this as an inverse head and shoulders or bullish head and shoulders, which is another very strong pattern to the upside. So not only do I have my measured move to, symmetry, and that'd be like wave 1, wave 2, wave 3, wave 4, wave 5, all that's projected out in the chart that I just had up, but even just the simple head and shoulders, right? Simple head and shoulders right there to break out would be awesome. So that's why that 26 level is so important. Patrick says, is it free? Yes. Free group chat, everything in there. So here's what it is. So I've got a free group chat for the whole community. Anytime I'm live on YouTube, my blog that I'll post on Fridays. That's just how we did for the week with all my trading systems, stocks, options, forex, cryptos, anything I'm liking, I post that in my blog. Anything I post on Twitter, overall analysis that I share, all my education from courses, trading room access. I'm doing some on-demand video series as well. I do a lot of private instruction, one-on-ones with small groups, and one-on-one traders or small groups of 5 or 10. Work with them in little workshops in 1 hour and 4 hour settings. So all this stuff's available in the Discord. And then got a great partnership with A1 Trading and Nick and the team. And so I've got savings on the Edge Finder. Anybody with charts and trading view, I've got some other softwares and affiliates out there that I work with. And then also every week on Mondays, I post a top weekly pick. So something I like, something I've been tracking and trading. Top weekly picks overall have been pretty darn successful. And look, I do this every day. So, I mean, I'm in the markets all the time and I can always find a trade. So I kind of take, my approach, which tends to be, this is what I like. And maybe it's a shotgun approach. And then for something like this with a top weekly pick, I just pick like a top trade. So I'll really try to narrow the focus. But win percentage wise, we've had a lot of wins on the top weekly picks. A lot of wins, a lot of wins, a lot of wins, a lot of wins. I'm trying to think what I had this week. I think it did a butterfly spread on Micron, which is going to be a small loss for 35 cents. Yep. The SPY, this is profitable. This is done. So that's closed. That's a win. $13 max profit. We're trading at 520. We did 5. What was the SPY yesterday? 5. I mean, we hit it. We already hit this. We hit the profit. So this one's closed out. We had highs up to 524. So that would have given us a max profit of around, $12. So closed for $11 credit or better. That was a trade in the SPY. BITO haven't had a pullback to 2650, but I'm long on BITO. Pound Aussie's up in profit. New Zealand Swiss up in profit. SPY. That was a, let's see here. Call, put, $3 debit. Yep, that's profit. That's done. Sorry, I need to update this. Closed. Win. And that was a 3.96 credit. Max profit was $4. So that was an easy trade. Anyway, that's that. So if you want the link and see it's in the chat, yeah, let me send it right now. So here is, I'll do an expiration that, oops, let me go invite link here. It doesn't expire. Here's the link. So here's my Discord. 3, 2, 1, go. There it is. So all are welcome. Love to have you. And, you know, be engaged, be respectful, be courteous. It's, I'm sure Nick deals with this a lot too. I mean, it's amazing how hard people work to, scam on Discord and Telegram. My account is one of one. Make sure you join the channel, you join the group. You know it's me. You can reach me directly. You send me messages, I will reply. I will tell you this, and I'm sure Nick is the same way. I will never reach out to you, right? I'm never going to initiate a conversation, especially when it's like, hey, how about this crazy thing I'm doing in crypto? Would you like to be a part of it? I'm never going to do that, right? So just please be careful out there with Telegram alerts. And I get this on Facebook all the time. The good thing is I'm out there enough that people know how to find me. So they just ask me, they send me, messages and they send me screenshots. And my first reply is, thanks for reaching out. That's not me. You know how to find me. So seeing this live right now, this is excellent. Seeing some new people join in. So happy. Awesome stuff. So thanks for popping in there. Easy peasy. It's really easy to share that link and see everyone join in live. So love it. If you have any questions, let me know. You know how to reach me. Okay. So silver gold we did. I saw somebody asking about the yens. I had a conversation about this earlier. Somebody asking about the pound yen. And then look, the yen in general. Okay. I'll say this about the yen in general. Everyone wants to see and everyone's expecting the yen to get super, super, super strong. Okay. Look, I want it too, right? I want the yen to get strong. I expect this carry trade at some point is going to unravel and it's going to be this tremendous move like we had back in 07, 08, maybe again like we had in 2013 and 14. The reality is this, okay? We are in a bull market. The Nikkei 225 is at all-time highs, okay? The US markets are at all-time highs. Momentum is strong. Greed is being fed, right? Um, Markets are ignoring risks and geopolitics right now. It just doesn't seem to be enough disruption out there to really break this cycle. So my thought of the yen is this: everyone wants to see a stronger yen. They finally came off negative interest rates. Well, guess what happened to the yens this week? They got weaker. So what does that mean? It just means we wait, you know? It just means we wait. I think the best way to trade the yen right now is to do short-term trading, 4-hour structure, 1-hour structure, look into scalps, stay bullish. In my opinion, stay bullish against the yen. Aussie yen, CAD yen, Swiss yen. Swiss yen's different. Swiss yen cut rates this week, so Swiss yen actually, I got saved on that trade. I was short Swiss yen at 169, and my Swiss yen right now, 168 and change. So I'm back up about 70, 80 pips on the Swiss yen. I was only about 20 pips away from a stop out on the Swiss yen. But my point is, every other currency pair, Aussie yen, CAD yen, Euro yen, pound yen, New Zealand yen, dollar yen, those 6 currency pairs, I still think that the pain trade against the yen is going to be a weaker yen, more risk on, more momentum, more melt up until the whole thing breaks again. Like this is the one thing we've created over the last 20 years is we've created these faster boom and bust cycles, and they're exhausting to have to go through. But think about the wealth opportunities you have by just being a little bit more informed and having the ability to time these markets just a little bit better, right? I mean, in 2020, I was a bear, not because of COVID. I didn't know what COVID was. Nobody knew what COVID was. Nobody knew it was going to tank the market in February, March of 2020, but it was the excuse and the catalyst that the market needed and used, right? 2022 was we had a melt up and we had, $6 trillion of stimulus, and all of a sudden the market's like, oh boy, we can't really sustain that because now interest rates are going to go from 0 to 5%. So it was a reality check. And that's what I called 2022 as a great reality check, right? The great reset. And then 2023 is the great recovery because we just had a beat up year where there's no place to hide. And then the market's like, oh, yeah, so we digested all this stuff and it's not that bad. And these companies still make money. So they latched on to the Mag 7. And then the Mag 7s are so large that they drove the markets higher because it's a market cap weighted index like the SPY and like the Qs, and they ripped to the upside. And everything from 490 stocks underperforming to 10 stocks that were really performing, they carried everything to higher highs, right? And we get into this year, market doesn't seem to care about any of it. They're like, look, we dealt with the reset, we dealt with the Mag 7. Now we're repricing, going for more growth, more momentum, and rates are getting cut, so bond prices are going to change. The attractiveness of a 4 to 5% yield. I mean, honestly, it should be pretty attractive. If you think about it, and this is like the crazy like gambling mentality of I'll say a trader and investor. Um, if somebody's willing to just go into the equities market, I mean, right now you could still get like a 12-month certificate of deposit or a 12-month money market instrument for maybe 5.5% ish. You could lock that in right now for the next 12 months and take virtually zero risk. And the market, like the S&P, historically annualizes about 8% a year. So would you like to take an 8% a year historical gain over potentially, 5%? But also have the risk of maybe 15, 20, 30% drawdowns, right? And surprisingly, it seems like everyone's saying yes to that. Like, yes, I'd rather be in the stock market. Yes, I don't want to miss out. But this is what happened in 2022. The reason I think we're seeing this continued melt up right now is it's like the coast is clear for risk appetite. The coast is clear for momentum. The market's making higher highs. Everyone's seeing higher highs. And so they're exiting the safe havens. They're getting back in the market. There's still money on the sidelines. And when it's getting pumped back in, it's like, what's it chasing? It's chasing momentum. It's chasing alpha. And it's amazing how far things can run when it seems broken. And somebody mentioned this earlier, and I know this. I mean, I have the self awareness of a trader to realize that when I'm talking out loud about like, should we just never short the market again? I know that that's testing my patience enough so that I'm going to keep taking stabs at the market like I've been taking it. Where if I'm right on the downside, I'll make money. If I'm right on this continued upside and this melt up higher, I'll make money. That's the good thing. Is like I don't have to be directionally right. I have to get some movement. Obviously, I need to get the market to move 50 points for me some way, one way or the other. If the market's dead flat, then yeah, it's going to be a tough trade, but I'll lose about half that debit. But for the most part, I think week after week I can consistently make gains. I don't have to make big profits, but if I risk $1,000 and I make $200 or $300, I think I can do that pretty consistently. And of course, I'm looking for asymmetry on some of my other trades. I mean, if gold goes up, I'll make, I don't know, probably 3 to 4 times my risk. If silver goes up, same type of thing. If Bitcoin goes up, I'm already up, 5x on my Bitcoin positions. I'm up on the entire portfolio playing with house money. So there's good things running in my overall portfolio. I've got dividends running. It's like I'm pretty diversified out there where, I can get some momentum on my side. I can get some index plays on my side. I can also be an investor. And at the same time, I trade a lot of currencies. I'm investing in the currency world with the Swiss pairs right now, and it's going great. Like this week, the Swiss put me at new highs in my portfolio. I'm sitting on like 1,300 pips of profit that I'm just going to run with. I'm not going to take profit yet. I told traders that I built a class for called Portfolio Builder. I'm still going to run these trades. I believe with a ton of conviction that I'm going to see my profit levels hit. And it might take another 6 months. It might take another 12 months. But to me, if I make 100% in my account, and I'm not joking, like 100% in that account, I don't care if it takes 2 years, because to get a 50% return every year is very challenging. But in an environment where I can have positive swap and good technicals and trade at 20 and 30-year lows, I'm going to buy that thing low. I'm going to ride these trades out. So I'm all over the place. But that's a good thing because not one thing is going to make or break me. I can always, find a way to carve out some profits and make some money. Okay. Jay, I'm glad you posted that chat right there. Yeah. So again, like, it's not me. And all you had to do was reach out and know it, right? But you knew it was a scam, so that's good. See, BRS says, I think Swiss will be weaker in the long term. There you go. Love to hear that. Opinions on the NAS. Sure. Let's talk a couple things here before I go. So the NAS, let's go NQ right here, trading at 18,529. I have a bunch of levels marked on this, just looking to see if we have some pullback levels. This is one thing that I mentioned, the hard part about shorting the market. And I do think this is going to continue to happen. We might inch slightly higher and then inch down and inch up and inch down. And either this thing is going to be like just grinding ever so slightly higher. But when it gets really dicey is going to be this. So if I just take a trend line here on the Nasdaq, okay, take a trend line right there. You can see where the floor has to break, right? If the floor breaks, which we came into this week's trading, this is a daily chart. So we've got 1, 2, 3. I mean, we came down on the Nasdaq pretty vulnerable to the downside, and it didn't happen, right? And what did we do? Well, we busted through the highs again, and we at least tested the all-time highs. Now, if this goes like testing, we're going to see that at some point, if this floor breaks, that's where the correction takes place. And that truly could be so fast. Like that break could be like a 1 to 5 day window. And then the market's like, okay, we've had enough. And then we go up higher again. I think right now, if the market is ignoring the Fed, the market's ignoring um, the inflation data, the market's ignoring a lot of geopolitical risk going on. We have a U.S. election coming out in November, which is going to be super dramatic, and I'm just dreading that because it's going to be annoying to see it every single day. But the market's ignoring all this right now, and it doesn't care, right? The market doesn't have emotions like we do. Now, the market's calculated in with all this sentiment and all the psychology and all these feelings of greed and fear, but it's crazy what we actually do, right? We get emotional on an instrument that really doesn't care. It's reactive, right? But at the same time, the market has a destination in mind, but it's always the journey that we're trading. I think that's what's so challenging is like we don't know how the market, like how does the Nasdaq get to 20,000 this year? How does the SPX get to 5,500 this year? Right? How does the SPY get to 550 or 600 this year? I don't know, but maybe that's the destination. And how it gets there is just up to the market. And so it's all the factors, right? It's like how well do we time it? Do we stay committed to it? How well do we protect our downside? We have to take all these things into consideration, right? So anyway, point is on this, if it's if it's obvious, not everybody trades it. But what I would say is like we're getting these like really tight weekly candles that are just inching ever so slightly higher. If that structure breaks, then yeah, there's going to be a really nice correction that ensues. And I don't think it has to be any bigger than like 3 to 5%. In a bull market, a 3 to 5% correction is very healthy and oftentimes met with a lot of buying power, buy the dip, right? I guess the concern now is if we see just single digit pullbacks and we don't really have any dramatic pullbacks, then the higher and higher it goes, right? The higher and higher it goes, and the longer it takes to break the structure, eventually, if it does crack that floor, it's going to actually have some room to maybe follow through. Okay. So this is kind of what I mentioned. Like I'm exhausted. Like I just want to see it go down. But if it doesn't happen, I can't sit here and say like, man, because I'm not losing money, right? Like I'm playing this. I'm playing strategies like this where it's like it can go up and I'll make money. It can go down, I'll make money. It can go down a lot and I'll make money. It can go up a lot and I'll make money. But this is what I like to do. So I'm way more directionally neutral than maybe what I'm leaning on as far as what I'm talking about. Because week to week, as long as we have reasonable volatility, I can get paid on that. And so that way it doesn't matter. As long as I'm positioned accordingly for an up or down move, doesn't matter. I just have to be, for me, I just know I have to be a little bit more conservative on profits. 10% take profit levels, 20% take profit levels. You can win a high percentage of your trades. So it's pretty good. Okay. Let's see here. Sean's asking about the hypertrend. Yeah, so I do have a link of that. Let me see if I can share. I do have a link. So how about this, Sean? If you're in my Discord group, if you join the Discord channel, which I posted earlier, look in my education tab or the education text channel. I'll get a direct link to that. I just got it yesterday because the course just launched a couple weeks ago. Hypertrend for this week is up 239 pips, and it did get beat up. The dollar beat it up a little bit, but my Swiss pairs crushed it. I made probably a few thousand pips on the Swiss pairs, and then the yen is switching directions a little bit because we had the pivot on the BOJ. So for the last, I've been trading this thing for 3 weeks, and it's up 6,300 pips. So it does pretty well. And I have it on some, like my Swiss pairs are buy only, and then the dollar and yen crosses I'm doing for full auto. So it's going buys and sells, and it's just waiting for alignments on timeframes. How do you separate your types of trades and decide on time frames? That's a pretty loaded question because it's just come with experience. I mean, if I can help traders do one thing, it would be whatever strategy you're interested in learning, just learn it. Don't shortcut it. Don't be like, well, I'll come back to that. It's like focus on a strategy, learn a strategy, and then when you're comfortable with it, it goes in your quiver, right? You want to expand into another strategy. Okay, learn it, know it, put it in your quiver. So, I've been trading for I've been in the markets for over 20 years. I've been trading and really grinding and actively managing portfolios since like 2007, 2008. A lot of that was the introduction to forex trading that made me a better stock trader, started incorporating options. So I'd say for the last 15 years, very active in the markets. The last 20 years has been my exposure in the markets. So anyway, but I don't want any trader out there to be like, I'm just going to buy this and that's all I ever need. It's the shiny object. That's not real. I mean, robots will ultimately have some situations where they're going to struggle. So that's why when I build robots that one robot trades a range, one robot trades a trend, one robot is full auto, one robot I have to deploy myself. My manual trading, I trade patterns, I trade big positions, I trade huge, areas where it's like I might let the market go against me 500 to 1,000 pips, but I invest at these lows and invest at these highs and I get direction right eventually you know? And then in options, I'm all over the place. I'm short term, I'm medium term, I'm long term. I'm out, 1 week, I'm out 30 days and 45 days, I'm out 12 months. So it's all over the place. But that's all come from little bite sized nuggets of I'm going to learn the strategy, understand the pros and cons. If I like it, I put it in my quiver and off I go. Right. But be good at a strategy. I mean, you truly can make money as a trader with one strategy. What you have to understand with that one strategy is it's not going to be perfect all the time. So if you're really good at a particular strategy, then understand how to filter for it, right? Understand how there's not conditions that are going to be met all the time for that one strategy. Example that I'll keep it really simple. If you're a trend trader, the market doesn't always trend. If you're a range trader, the market doesn't always range, right? And I'm talking, and this could be broadly, put into Forex or put into stocks or whatever you're trading. Point is, our systems, our strategies are only as good as the market environment that we're trading. So that's one thing I would encourage all of you to learn is understand what the market is doing and showing like characteristics and tendencies for, and then trade that environment. Like right now, it is momentum, it is trend, it is making higher highs, it's melting up. I mean, that's what's happening. And so don't fight it. I mean, it's funny to me to watch people that are trying to call tops in Nvidia. And I mean, I had a bear call spread in JP Morgan this week, and it's up another, like, I think I closed out. So I had a bear call spread all the way up to 195, and I took the trade when it was trading at 185. It was out of the money. It was a 85, 86% probability profit. This last like week, the position got threatened. We're trading at 190, and I was basically like, instead of being down, $1,000, I was down like $100, and I'm like, well, this could get worse on me. I'm just going to close it. So I just recognized like I'm calling a top and I'm trying to cap something that clearly wants to go higher. So I just I just get out. But we have to recognize that. So if you keep it really simple, learn how to trade structure in the market, trade support, trade resistance, trade trend lines, understand the difference between a boxed in range and a breakout. Like looking at, I mean, gold and silver are perfect charts, right? Gold has already had its breakout kind of proven to us. We broke above this level here at 2070. I mean, gold to me is looking better and more bullish. Go to a Bitcoin chart. When this thing broke, and I mean, you can go back to months and months and months of my live sessions. I mean, 30,000 was a key level. And when it broke above 30,000, why are you not in the trade? It's a breakout. And look at where we're at. I mean, we've doubled from there, more than doubled from there. Silver is looking good, but I want to see if it breaks out. If it breaks above 26, awesome. That's my breakout trade, you know? So that's the structure that I'm watching for. And then with that structure gives me a better sense of direction. I can be directional in this position. I could be like, look, I could be neutral right now. I could say, if silver doesn't want to go anywhere, I can sell it here. I can buy it here. I can trade the range. right? I can do, there's option strategies you can be neutral on. You can do an iron condor, you can do a strangle, you can do all sorts of stuff to make money if it doesn't go anywhere. But if it goes up, I want to be directional. Make sense? All right. So hopefully that makes sense. And there's just a lot, right? There's just a lot to soak in. There's a lot to dive into as trading. Everywhere you turn, it's a new this and it's a new this. I'm telling you, just focus, right? I mean, trading is not easy if you're going to do it for the next 10 years. You're going to have challenges, but like I'm telling you this, like you will stay mentally sharp. You will enjoy and embrace the process. And I've said this for many, many years. Process equals profits. I know that look, I closed out 192 positions this week in my portfolio. That's a lot of trades. Okay. But it's part of the process. I take trades and I expect to win. If I don't win, okay, fine, that sucks. If I do win, it's what I expect to do, you know? So I don't really have a lot of ups and downs. I'm not super excited and I'm not super depressed. What I need is, I'm glad it's closing bell at 4 p.m. Eastern time. I'm glad I got a weekend to decompress. I'm glad I get to go to the gym and, have my anti-obesity and de-stressors, because like it is a high tension environment if you let it be. But I trade small, I trade often, always control your risk, and it's just a trade. So that is the process. And if you embrace that and really take that to heart, don't let these markets make you emotional, right? I hope that sinks in. I talk about equity management all the time, but nobody cares about it until you lose all your money. Nobody cares about equity management and being smart with your money and trading smaller until you blow up your first account. So I've been fortunate. I never have blown up an account. I started with $2,500 in a Forex account. I started with a $2,000 Roth IRA, and I've never blown up the account because I learned from a professional trader in the Forex side of things, and I invested in myself and added more to it. But once I got to like $25,000, it just grew and it compounded, and that's obviously 15 years ago. And I've been fortunate that somehow equity management made some sense to me. But I will tell you this: I go back to my first days of trading Forex. I was trading on a $2,500 account. I was trading $5 and $10 pips. I was literally trading half in full standard lots on a $2,500 account, which I would never ever do today. I've been teaching traders for a long time. I would never encourage that. That's insane leverage. Now that's the draw of Forex is like leverage your. It's dangerous. It's like if you can take a $2,000 account and turn it into $2,500 or $3,000, awesome. Do it the right way. And then that 3 can become 5 and that 5 can become 10 over time. But when I made the most money, it's like I had lightning in a bottle, but I put in, another 10 grand in my account. I took a 10K account to a 20K account, and then 20 grew really, really quickly. And I'm fortunate for that because it was the right strategy at the right time. And I admit that. But once I got to a certain level where it's like, okay, now I don't have to put more money in my account. Now I'm just growing and preserving my capital. It's always been about process equals profits. And that's why there's not a lot of highs and lows in the market. You just keep trading. You just keep trading. You just keep trading. That's one thing you can do. You can control your trade size. You can stay in this market. You can survive these markets. You can keep trading. So you're here today, but you're here also next year and the year after that and the year after that. And every single year is a challenge that you embrace, a challenge that you welcome, and you figure out how to, make some money. It's not about taming the markets. It's not about beating the markets. It's about making money, and I don't care how we do it. There's a lot of ways to do it. If you want, you want to talk to me, I could probably give you 100 different strategies that I'm trading. I don't like the fact that I trade 100 strategies because it's like, dude, just concentrate, you know. But it's like the good thing is I've got variety, So there's a lot of ways where I don't care what the market does, up, down, sideways. I feel like I can make money, so that's a good thing. All right. I see some comments and questions coming in. Thank you so much. And I saw a great little jump here in all the Discord. So everyone jumping in here and following me. That's freaking awesome. And did I see a Jerome Powell in here? Man, I've got Jerome Powell in my Discord. That's amazing. All right. Well, hopefully he doesn't ask me for advice on the Fed. Just kidding. All right. Nice to see all those new followers. And look, happy Friday. Markets aren't really doing much today. It's pretty quiet out there. But I am probably going to get something positioned on this today. I've got my equities on demand trading room starting in about 6 minutes. So I will look to get a little bit more neutral on this, take this into next week. The one thing we do have going out to next Thursday, because markets will be closed for Good Friday, So the expirations for the options world and quarterly expirations are next Thursday on the 28th. I think there's enough volatility that if I get positioned for something today, we do see some movement coming into next week. But then we hit the ground running with a busy week, right out of the gates in April. So I'm going to debate. If I feel like if I get positioned today, we had a big gap over the weekend. This week on Monday, maybe it's another gap into the quarterly expirations on the 28th. All I need again is like a 50-point move, and I'll probably say 50 to 60 points. If I get that, it should be fine. So I'm going to think about that today. And then, yeah, whatever, man. There's all sorts of crap going on. Charles says, "Yay, delighted to find the real Chris." Well, Charles, who you been finding out there? How many fake Chris's are out there? I know there's a few. So I'm glad you're here. You know how to find me in the Discord group, and that is me. Like I said, you know how to reach me. Reach out to me directly. Anything that looks suspicious, it probably is. You know how to reach me in the Discord group. You know how to find me. I'm here it's like I'm here, all the time in my trading rooms. I'm here with, Nick and the team a couple times a week. You know how to find me. So don't engage in those stupid conversations where it's like, hey, I got this crypto thing. It's crap, man. Scams. So you know it. All right. Thanks, everybody. Yeah, same thing. Discord, Telegram, Facebook. We deal with scammers all the time. Like, just come out, find me in Discord. Find me in my YouTube sessions. Find me on live sessions. You know how to get me. Okie dokie. I'll let you go for today. Happy Friday. I'll be back next week. I'll probably join with the team on Monday, perhaps. And the good thing is I'm going to go hopefully see the team in a couple weeks. I'll be in the Georgia area for a week in April, and I'll pop in and see what's happening at all A1 Trading. It'd be nice to see everybody in person, and hopefully I'll see y'all next week. Okay, Equities on Demand students, let's switch over to the trading room in 4 minutes. All the new people in the Discord group, thanks for joining in today. Again, take a look at the channels and the threads. Scope out the education if interested. I do a lot of private instruction. You can just reach out to me. All good stuff. And we'll see you soon. Happy trading, lots of profits. All right, take care. Have a good weekend.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.